Awesome. Great to see all of you coming in now from the waiting room. So really excited that you can join us today. Thank you for taking the time out of your busy day to spend 45 minutes with us. We really appreciate it and looking forward to sharing some insight on practice reporting, a topic that's commonly misunderstood across not only Practice Ignition's customers, but I think the broader industry. So really excited to be delivering this high quality content to you today. Just wanted to give everyone the heads up that we're going to record this webinar and also share out the slides as well. We'll be collating the content from this webinar series that we've done into a bit more of a digestible format for you as well. So if there's anything that you missed or anything that you want to share with your team, we'll be putting that into a format so you can do so, which is fantastic. So great to see so many of you coming in today. I would assume that some of you, if you're watching the recording, have taken some additional days off over the long weekend. So wherever you are tuning in from, if you're in Australia or New Zealand, I hope you had a great long weekend. And gee, it feels like this year's just rocketing past. We're already well stuck into April, and I started planning for Q2, which is very scary. So really appreciate your time in joining us today. But without further ado, I wanted to introduce the star of our webinar today. Will, if you could throw your camera on and give us a quick introduction for those of you who don't know you, would love to hear more about yourself, your background, and the cool things that Link are up to.
Fantastic, thanks, Ethan. So yeah, firstly, just want to say thank you very much for everyone who's sort of taking some time out of their day to come and hear us talk about practice reporting. So yeah, my background is I've been helping implement Xero Practice Manager, Workflow Max, Unleashed, all these cloud apps since 2010, so I got a bit of experience. And then really focused the past sort of 4 years really on Xero Practice Manager and expanding the reporting capabilities out of it using the platform we've built, Link Reporting. So what's unique about Link Reporting is we have built our own backend. So rather than leaning on the Power BI platform, we've written our own backend. We've got our own logic, so we can do a lot of stuff that other reporting apps can't do, really around that work in progress and being able to balance that work in progress back to what's in XPM. So yeah, so that's basically what I've done. Plenty of experience implementing and supporting Xero Practice Manager and also taking it to the next level with the reporting application that we've built. And my business partner, Ruben Sweeney, is also on the call. So if I miss something, he might turn his camera on and say a few words. But yeah, so it's basically Ruben and myself who have worked together to build this platform, along with our team, of course. We couldn't do it without our team. So yeah,
awesome.
So just
the dream team.
Really excited to have you guys on board and yeah, checking out this webinar.
Cool. Thanks, mate. It's no easy feat building and maintaining a software platform, and to do it with such a lean team, you guys are absolutely killing it. And so I just wanted to spend 2 minutes talking about why we actually are bothering to talk about this and why we created this series called Simplifying Billing Models and Reporting with XPM and PI. We've had so much great feedback from our customers who have worked with Will and Ruben that we decided that it was time that we start to share this knowledge more broadly. And so I know that there are a lot of PI customers on today, but I can see that there are a number who aren't customers as well. Both of you are going to get value out of this session today. We're going to be talking holistically about the value of WIP, the kind of metrics that you need to be reporting on, how this interacts when you're working with fixed price agreements. Obviously something that we get questions about all the time, given that we integrate with workflow solutions like Xero Practice Manager as well. So the three key reasons that why we created this series was there was general confusion around the implication of fixed pricing on reporting. You'd be aware that there are a myriad of client reporting tools out there: Fathom, Spotlight, Futurely, Float, all these sort of management reporting solutions, but there's really nothing out there that's been bespoke, created for practices to be able to run their business efficiently. There was sort of an ongoing struggle to grapple with WIP. There's sort of a myriad of best practice methodologies that are out there. You could probably sit on 10 different webinars and hear 10 different ways of doing things at the moment. So what we're looking to do is establish a really benchmark process that you guys can adopt and build into your own practice with the supporting content behind there to assist you in implementation. And then no direct access to the right metrics to run your practice. And we see this all the time. It's something that we've tried to solve in part with Practice Ignition, providing a dashboard, but we've also realized that Link just offers so much more visibility into that, which you're going to see today. I wanted to start off by running a quick poll to actually understand how many of you are actively measuring and reporting on WIP in your business. So I'm going to launch this poll now, and I'll give you guys a few seconds to answer there, but it'd be really interesting to see whether, yes, it's something that's critical to how you make business decisions. whether it's not something that you're looking at or whether it's something that you would like to be looking at, but you struggle to get accurate reporting and potentially understand the significance of WIP in your business. So I'll wait till all of you have voted there. I can see about 60% of you have voted. Jump in. Always love a little bit of crowd participation in these things, and in the fact that we don't have physical events anymore. So I'll try and involve you guys as much as we can. All right, we can hold it up there, but just to share the results for all of your interest, it looks like about half of you are measuring WIP in your business. It's critical to how you run your business, which is great. But there's also about 35% who would like to, but struggle to get accurate reporting, which is pretty representative of the customers that we work with as well. So in terms of our agenda today, we're going to cover, I guess, really go back to basics. What is work in progress? What are the challenges that we've found with measuring work in progress? What are the implications of fixed price agreements on WIP? What the WIP movements look like in link reporting, and Will's going to share some awesome staff efficiency and WIP performance reports, which I absolutely love. And then we're going to talk about how you can reprice your fixed price agreements and what are some of the indicators to look for to understand whether you've priced a job incorrectly or your team's not up to scratch with delivering the service, and then cover off on where to learn more. If you guys do have any questions, drop them in the Q&A. I'm more than happy to facilitate and ask Will any questions if it's relevant throughout the session today. If you could use the Q&A and not the chat, that would be great. It's just really hard to keep track of a rolling chat box. But without further ado, Will, I might pass over to you to get stuck into the content and take us back to basics with what is work in progress and why does it matter?
Fantastic. Right, so I should just be able to share my screen and that'll take over.
Absolutely.
Cool. If you could just confirm for me that you can see some slides.
Yep. Perfect, mate. All good.
We're away. Excellent. Okay, so what is work in progress and why does it matter? So first I want to touch on what work in progress is. And again, as Ethan said, we just want to come right back to the basics. So work in progress essentially is your unbilled time and costs. So let's say, for example, you said to me, hey, Will, can you build me a fence, right? And I say, yes, I can do that. I'm going to charge you $100 per hour. And after 5 hours, if I've done 5 hours of work, I could say that I've got $500 of work in progress. So if I go out that night for a beer, I know that you owe me $500 because I've done that work, but I have not yet invoiced it. So in the back of my mind, that's an asset to me. It's work I've done, haven't yet invoiced. So that's your unbilled time. Unbilled cost is this. Let's say if I bought some materials, so I might have spent $300 on timber. If I've spent $300 on timber, done $500 a time, I know that I've got $800 of work in progress. So that's an asset to me, a liability to you, because at some stage, I'm going to send you an invoice for that work, and then you'll pay that, and that becomes cash in my bank account. So very simplistically, that is what work in progress is. So we like to think about work in progress, or WIP as it's known, is the bank account before your bank account. So in an accounting practice, you'll have work in progress. So it's work that your team have done on job, but you haven't yet invoiced it. So if you have $100,000 of work in progress, it's essentially 100 grand cash that you haven't yet sent an invoice for. So that's why it's really important to keep an eye on it, because if that keeps increasing, so 1 month it's 100 grand, the next it's 120, 140, and get to the end of the year and you've got 250 grand of WIP. The challenge is that it can become hard to bill because the value you've created for those customers got forgotten about 8-9 months ago. So keeping an eye on this bank account before your bank account is really, really important. So the key thing with work in progress is that there's only 2 things we can do with it. One is we can invoice it, or we can write it off. So under that example where I built you a fence, let's say I built the fence, I ended up spending 20 hours, so it's $2,000 of work in progress. Then we go check it out and you go, actually, Will, you didn't get that gate square before you hung it. So then I have to go and do a bit more work. That extra work that I'm doing to make sure that the gate is square is going to be time that I'm doing, so it's work in progress, because it's billable work to me. But once I finish the job, I have to write that time off, so it's a lost asset to me. So once you've done all of the work, we need to look at all the work we've done, multiplied by our billable rate, that's our work in progress, and figure out, can we invoice all of it, or can we only invoice a portion and the rest has to be written off? So those are our 2 options there, invoice it or write it off.
Well, just your observation, I guess I'm keen to hear from your perspective, what are, say, the 2 biggest challenges that you see with firms who have, I don't know, this the next point kind of leads into this, but firms that are transitioning billing models, in particular to fixed fee, and that's sort of a general shift in the industry with more services being priced up front or at least on a fixed price basis. What are some of the main challenges that you've seen in the clients that you're working with at Link that you see coming up time and time again with measuring WIP or even their understanding of WIP as a concept in the business?
Yeah, I think what happens is when people move over to the fixed price agreement model, or particularly new practices that are starting up that adopt from day one this fixed price agreement model, they often think that, right, well, I'm not actually billing these timesheets, I'm billing on a fixed price, so therefore I don't need to track my WIP. It's not important. But what we're about to see very soon is that work in progress is more than what we're going to bill. It's more than that, that first bank account. It's also giving us insight into where our write-offs are occurring, because write-offs are the real secret source of an accounting practice if we want to improve performance, because it allows us to see where issues arise. So I think that's the key thing, is that the practices we find are traditional practices bill on that time and cost model or are quoted. These newer practices bill on fixed price agreements, and those ones transitioning over, they're the ones that are really finding this challenging because they move from systems such as APS or iFirm or these other practice management systems. They move to XPM and find out that the WIP reporting isn't quite what they're used to. That's a big challenge for them. And that's what we've solved here with Link Reporting, is giving you that level of reporting you're used to out of these APS type solutions, but you can get it out of Xero Practice Manager.
Cool. Awesome, mate.
Cool. And there, the last point there is WIP is still important if your clients are on fixed fees. So again, some people think that, right, if they're all fixed fee, I don't need to worry about my WIP because it's all dealt with for my fixed price agreement billing. The reality is that that work in progress is going to give you the information around your write-offs. Cool. All right, so I just want to put together like a practical example so we can look at how these write-offs work. So let's say we've got this client, David Industries, and they're on a $3,000 per annum fixed price agreement. So where they've come to us and we've created a proposal and practice ignition, they've accepted that at $250 per month, and that's to do their annual accounts, financial statements, and tax returns. So that's our annual work. So we're going to bill them $250 per month. At the end of the job, we want to look at closing that out and doing our WIP wash up. So let's say at the end of the job, we've done $5,000 of billable time, and that's happened for whatever reason. Perhaps we underpriced the work. Perhaps we had some juniors working on it that did a little bit of learning. But at the end of the day, $5,000 of billable time, but we're only able to invoice at $3,000 because that's what our fixed price agreement was. So that $2,000 becomes a write-off. And that is where we're going to get this really deep insight into what's happening. So the insights we can gather from this is, does the team member working on this job need more support from us? So perhaps we haven't given them enough training on how to prepare the annual financial statements in Xero. Perhaps we need to look at streamlining how we do our work papers. So there's a whole lot of different things we can do to help improve the performance of that team member around education. Next thing is, do my team need more training on how to deliver the service? So again, if it's annual accounts, we might find that there's things we can do to streamline the work papers preparation, or perhaps you don't have very good templates set up in Xero. So you want to be looking at these write-offs, talking to your team and understanding why they're occurring. Another big thing is, perhaps we just underpriced the job. We priced this job at $5,000. The reality is they had 7 different bank accounts. There was intercompany transactions with their trust, and you're having to do all these reversing journals. There's no way we can deliver it at $3,000. And that is the information we've got now, is we know that we wrote off $2,000. Next year, this needs to be a $5,000 job. Have that conversation with the client. Next year, we won't write off $2,000. And that's how we improve our performance from year to year, is because we're analyzing those write-offs from the previous year so we can make better decisions around our pricing next year, or helping our staff deliver within budget. So without tracking our WIP, without tracking our write-offs, we don't get any of that visibility.
And this is super important in the lead up to end of financial year. Hey, when we see a spike of accounting firms re-engaging their clients for the next 12 months, this is critical information to be sitting down with, or not necessarily exposing to your clients, but critical information to help you sit down with your clients and understand how you're repricing the jobs for the following year. And for those of you who are using PIs, it's going to be gold for you guys who are actually doing your renewals, so your bulk kickoffs for the next 12 months of your agreements. This is insight that is absolutely key to being able to make informed decisions around how you've priced the job. Not only that, but also whether you've included all of the necessary scope in the initial work as well. So if you need to rescope the engagement letter, rescope the agreement with clients, it's a good opportunity to do that as well. So yeah, super important.
Absolutely, Ethan. Yeah, and something that we often hear about is, because obviously we talk to all sorts of practices, some that get our reports, they love it, they understand the concept, other ones that go, look, we just run our business off the P&L. As long as we're making a 50% GP, we're happy. What I say to that is like, right, if you're making a 50% GP, you might find that you're making 70, 80% GP on your top clients, you're only making 20% on your bottom clients. So why don't we look analyzing those bottom clients and lifting them up? And if you're not analyzing the stuff, we're also missing opportunities to help our team improve their performance. So overall, if we're not tracking this stuff, we're actually not helping our team improve, and we're not helping our business improve as well. So I feel like in a good economy and things are growing, running off your GP is one way to do it. But if things do downturn from what we've seen over the past year, this is going to become even more important. So yeah. Right, so work in progress has a formula, and this is where we get a little bit geeky now. So if you're on your emails and listening to this webinar, now's the time to check out what we're about to cover here. So we all know the accounting equation. Assets. I'm going to get in trouble here. So we've got our assets and revenue, liability, equity, and our expenses. You know how to put those all together with your debits and credits. But a bit like the accounting equation, we also have a work in progress equation. And this is something that I suppose, taught about 4 years ago. And this has become the foundational logic for link reporting. So this is the logic here for work in progress. So you take your opening work in progress at the start of a reporting period. So this could be the 1st of April, let's say. So our opening WIP is our time and cost at the start of the period. So if back in March, we had $600 that was unbilled, that becomes our opening WIP at the start of this period, right? So we take our opening WIP, then if we add our time in this period, we add our costs in this period, we subtract what was invoiced, we add our write-ups and subtract our write-offs, we get our closing work in progress. So a bit like the accounting equation, it always balances. With the WIP formula, it always balances. So if we want to take our opening WIP and we want to end with 0 closing WIP, we have to do something in this formula here. We have to get rid of that WIP somehow. That's really, really fascinating. What we're going to do now is we're going to look at some examples so this makes a lot more sense. Right, before we do that, I just want to point out that WIP is the starting point for all reporting. So I think something that I didn't really understand when I first started learning about work in progress is when you learn how to read a WIP movement report, it really allows you to read what's happening in the business. Obviously, over the past few years, I've spent a lot of time around work in progress. I've written the foundational logic in the system, so I really do understand it. But before that, I didn't quite understand the power that was kept within this formula. When you understand how to read work in progress, you can look at that report and read the business. You can see where the time was added. You can see where your invoices are at. You can see where the write-offs and the write-ups are happening. It's really powerful. And from that, you learn to pull insights out of it. So one of them is, where has most of our time been spent this month? So if we run a WIP report for a month and we sort by time added, you can very quickly see which clients or which job managers or which jobs or whichever way we want to group that, where have we added most of our time? It allows me to see across my whole team, where are their efforts being focused? We can also see which clients did we invoice the most. You might want to run it over a 12-month period, sort by invoiced, and you see all your top invoice clients at the top. Allows you to see where you should be focusing your efforts in terms of that relationship. Which job managers have invoiced the most? Same sort of thing, just sorting from high to low, this time grouped by job manager. There's a real key one. Which jobs need to be invoiced? If we take that WIP report, we group it by client and then sort by closing WIP balance, I can very quickly see which of my clients have the highest WIP balances. Another thing I want to look at is, have I entered a lot of time this month? So if I have a high opening WIP balance, no time added, and a high closing WIP balance, that's a huge risk to me. This gives you the ability to see it. Where are our write-offs occurring and why? And this is the insight in how we improve the performance of our team, but also our practice overall. And there's just so much more. I mean, I could go on all day. There's so much we can read out of a WIP report, but once you start understanding and learning how to read this report, you can essentially just look at it and get a real good gut feel about how things are performing in the practice and where you need to focus your efforts. So that's why we want to be tracking our WIP. Now we're going to look at some practical examples. Right, so we're first going to look at time charge agreements. So time charge agreements is your billable work. So a little bit of terminology here. Fixed price agreements, agreements that we're going to bill over a 12-month period, right? So we use Practice Ignition, set up an engagement, we bill over those 12 months. Time charge agreements are ones that we're doing on a time and cost basis, or it might be quoted. So you might say, look, we're going to charge you $5 grand for the work. We do the work, then we send an invoice. The difference between the two is one is a recurring monthly payment. The other one is billed on time and cost or on a quoted fee. Hope that makes sense. Right, so time charge agreement. We've got our formula. Now let's say we add $1,000 of time to the job. Our WIP balance will be $1,000. Pretty simple. If we add 300, we're going to have another $300 added to our closing WIP balance, giving us 1,300. 800 goes to 2 grand. So right, let me just stop there. So what we've done is we added 3 timesheet entries and it's come up to $2,000. Now what we want to do is look at reducing that work in progress balance. And as we know, there's 2 ways we can do that. One is by doing a write-up or a write-off. So it's a WIP wash-up. The other one is raise an invoice. So if I raise an invoice now for $1,500, that's going to reduce my work in progress balance to $500. Now, what we often see is people go, right, well, I've done my invoice. I'm just going to close the job. The problem is we're going to close this job with $500 of work in progress on it and forget about it. What's really, really important for our reporting is we do a WIP wash-up. That's where we take this invoiced amount and we apportion it across all of those timesheet entries. What that will do is it's going to give us a write-off. So we arrive at no WIP. So we always want to be making sure that we're closing our jobs with a 0 work in progress balance. Otherwise, we're going to have accumulating work in progress balance on all of our closed jobs. We're also not going to get that insight there into this write-off. And that write-off tells us so much about what happened on this job. So we really want to be analyzing it. So I hope that all makes sense. That's your traditional time and cost job. We've done the timesheet entries, we've raised the invoice, we've done a WIP wash-up, giving us 0 WIP once we close the job. Cool. Now, for this fixed price agreement example, what we're going to do here is we're going to actually look at the 12 months because this is going to, hopefully, if you are using fixed price agreements, you understand that you bill over 12 months. We're going to run through each of these 12 months. So what's going to happen is we have a fixed price agreement that we've invoiced, that we're going to be invoicing through Practice Ignition. And then we'll look at how we do those timesheet entries in Xero Practice Manager and what the WIP ledger looks like. Now, before I rip into this, some of you may have come to our first webinar where we talked about different fixed price agreement billing models. You can bill in advance, you can bill in period, or you can bill based on the contract period. So very quickly, just touch on that. In advance means you're going to bill upfront for the year ahead. So you're going to do 12 installments, you collect that funds up front, then the next financial year, you do the work for the money that you've collected. So that's in advance. The other way is in period. So what you do is you bill over those 12 months, but you actually do the work within those 12 months. So effectively what we're doing in advance, we're collecting our cash a year up front, and then we're doing the work. In period, we're doing the work as we're collecting the invoices. Contract period is the third one, which we tend to not recommend because of the administration burden. But what we do is the month that we sign them up, we start those 12 monthly payments. Once we collect the 12 payments, we then start the work. The challenge with that is you're having 12 months of rollovers because depending on when you sign that client up will determine when you do your rollover. The benefit of working with in advanced or in period means you're going to get to do one annual rollover. Generally, you align that with your practice financial year. So with that being said, this example I'm about to show you is going to be using the in period method. So we're going to be invoicing the 12 months. We're also going to be doing the work in these 12 months. In the in advanced method, there'd be 24 months, and I didn't want to do 24 slides here. Sweet. Okay, so month 1, we've got our WIP formula, which we're all quite familiar with now. What's going to happen? Month 1, we're going to send an invoice for $250. Now, because we subtract the invoices from our formula, that's going to show us negative work in progress. So our closing WIP is going to be negative $250. This is different to the other examples we looked at because that was positive work in progress. We do time, it's positive. We invoice, it's negative. Cool. Next month, our opening work in progress for month 2 is negative $250 because that's rolled over from the previous month. We send another invoice for $250. Our closing WIP, $500. Cool, all makes sense. Now, month 3, opening WIP, $500. Now this month, we add some time. So the client calls up, we've got a client query. They go, hey, look, I'm looking at financing a vehicle. What do you recommend? Should we do it on, should we purchase it or should we lease it? And then we just give them, half an hour of advice on the phone. So what we want to do is we want to load that time. I'm not going to go into a full detail of how we deal with general queries and things right now. Let's just assume that question related to the end of year accounts. So we're going to load it against this job. So we now have $100 of work in progress on this job versus the $500 of negative work in progress, right? We then raise an invoice. So our closing WIP is now $650, right? Next month, $650 invoice, $900. We've now got $900 negative WIP. So what we're seeing here, On a fixed price agreement, you have negative WIP that accumulates linearly, in a linear fashion. And then our positive WIP is going to end up spiking our WIP based on when we do the work, which we're about to see here in month 5. So month 5, we're going to do our annual financial statements, right? So all the work's come in, they've done our client questionnaire, we're about to get stuck into the work. So we've got $900 of negative WIP. We invoice 250. Sorry, it might be month 6 we do this. No, here we go. No, I've got this. So we've started this job with negative 1,150. We've now done a timesheet entry of $150. So that reduces our WIP, our negative WIP balance down to $1,000. Hope it all makes sense. Now we do another timesheet entry of $800. So you can probably guess what's going to happen next. Our negative WIP will drop down to $200. Another timesheet entry, $300. We now got $100 of work in progress. So what we've done now is we've actually moved away from having negative WIP. Negative WIP's great because that means we've invoiced in advance. So negative WIP means we've got cash in the bank before we've done the work. So we've now moved over from having negative WIP to positive WIP. Another WIP entry, another WIP entry. So now I've got $1,900 of work in progress. Hope that all makes sense. Another one, right? So we're now at $2,900 of work in progress. This takes us to month 6, right? So our opening WIP is $2,900. Send another invoice for $250. That's going to reduce our WIP balance down. Next month, reducing our WIP. So this is what's happening. We're sending these next invoices here. All the way down. Let's jump forward to month 12. As you're seeing, what we want to have in a perfect world when we hit month 12 is we want to have negative WIP, because when we close the job with negative WIP, we're going to have a write-up. But as you're about to see here, we're starting month 12 with $1,400, which is not ideal, right? Because we know what's going to happen next. We're going to send our invoice, reduces our WIP down to $1,150. So what we're going to have to do is we have to write that off. If we want to arrive at a closing WIP balance before we close that job out, we have to get rid of it, and we do it by doing a write-off of that 1,150. So if we were to have negative WIP when we finish this job, when we wash it up, that would have arrived in the write-up column as a positive number to close that WIP out. So that's what it looks like when you're doing, when you're running a fixed price agreement. You have your negative WIP, which is consistent per month, and then the time is entered throughout that year. Hope that all makes sense. Right, so now that we understand the WIP formula, we understand how it all fits together, the question now is the write-off apportionment. How does this work? So we know we wrote off $1,150. How does this impact our reporting? So I write off 1,150. So month 1, remember Chris, sorry, I think it was like month 2 or 3, wasn't it? Anyway, in the first month, Chris did $100. That was that general query he talked about whether to finance or lease a vehicle. In month 5, Sarah started the work on the annual accounts, $150. Fast forward through, those are all of our WIP entries. That's all the time that was entered on the job, which is 4,150 in total on the job. So if we look at that from an apportion perspective, that's how it's all apportioned out as percentages. That's how that write-off would be apportioned out. So if we want to see what our write-offs are, for Chris wears 886.65 of the write-off. Sarah would wear 263.35. So it's apportioned out based on the billable WIP that was put on the job. So in a perfect world, we would have closed the job out with negative WIP. So that would become a write-up, and then Chris and Sarah would receive write-ups rather than write-offs. So this is what we can do is we now want to analyze this and talk to Sarah and Chris and go, hey, what actually happened on that job? We might find that we underpriced it. Well, great. We need to look at lifting the fee next year. Or we might find that every time Chris works on a job, we're losing money. So then we need to go, right, is Chris's billable rate set correctly? And we need to look at potentially training him because he might not know to open multiple web browsers, because Chris used to work in MYOB, but we show him how to open multiple web browsers. Now he's not clicking back through to find his balance sheet every time he does something. Write-offs disappear. Didn't know that if we didn't know this and talk to Chris about that. Multiple web browsers. If you're using Xero, you've got to do that. Right, WIP movements. So again, I just want to push that. If you can read work in progress, you can read the business. It's so important. As accountants, we know how to look at a profit and loss. We know how to look at a balance sheet. We can read it. We understand how the business is performing. Work in progress is that step beforehand. If you learn to read it, you really can understand what's happening. So let's take a look. So let me just jump in. I'm going to take you into link reporting now. So this is the.
And so before you jump into that, mate, just on the
Sure.
capacity point of view, from looking at the team performance, is this something that you see firms doing at the moment with the guys that you're working with from a consulting and link reporting perspective? Is it something that's commonly measured? How is that measured? Like, what would you say the current state of affairs are for the majority of the firms that come across your front door?
Is it sorry, the how the write-offs are apportioned through to people?
Yeah, the apportionment. Yep.
Yeah, great question. So we find quite a mixed bag, to be fair. I find that more the traditional practices that have run 30, 40 staff, they've been around for 20, 30 years, they rely on their WIP because they've come from that traditional method. So then they expect these reports. They move to Zero Practice Manager, find out they can't get the reports, and that's where they come to us and find that, yes, they can get all the reports now. With these sort of the newer practices starting up, a lot of this WIP stuff, when you work for an accounting practice, you don't really get taught this. Then you go out on your own, you start your own practice, and you never really get taught the education around how to read WIP. And that's what we're trying to do, is push this education out around what these older directors, well, not older directors, but the ones that have been taught how to read WIP. Now, when it comes to that reporting at a staff member level, what's really, really important is that we are collecting WIP and invoices in the same jobs. And that's where we find a lot of challenges with people signing up to link reporting and trying to get value out of the reports, is they aren't using a process that puts WIP and invoices in the same job, like we saw in that example earlier. So if we have invoices sitting in a billing job over here, and then we put all of our timesheets on this job over here, when we do our wash-ups, the billing job will have a huge write-up because there's no time on it. The job with all the time and no invoices, we write all that time off. So then we have a situation where all of our staff performance reporting doesn't work. Our client reporting doesn't work. So you actually don't get any good reporting. So like the number one rule, a law, if anything, a law you need to abide by when using Zero Practice Manager or any job management system for that matter, is you need to have time and invoices sitting in the same job so you can do that apportionment. Without that, you don't get any good reporting. So that's the biggest challenge we see. And it is a mixed bag, 50-50. Some people have good data, some people don't have good data. The ones that don't have good data, we need to work with them to restructure everything. Generally, that's for next financial year, and they come back ready to rock and roll.
Awesome.
Cool. All right. So hope you guys are enjoying the alpacas here. So this is the homepage of link reporting. Now, the first thing I want to point out here is up on the right-hand corner here. What we do is we time and date stamp when we last synced your data with Zero Practice Manager, and we give it a little green checkbox here to say that, yes, your WIP and link reporting matches, the WIP balance matches to the cent backwards in Zero Practice Manager. The reason we're seeing an orange one here, it's because it's a demo company and we're not syncing the data every night with a live XPM account. But what you'd see in a live account is a green checkbox and a time and date stamp when that was synced. So that's happening every night. So every morning you wake up and you got perfectly up-to-date data. That green check lets you know that it's perfectly synced and reconciled. So down the side here, we've got home, which we're on right now, and all you get there is this little reconciliation thing and some nice alpacas in a field. Starting at the bottom here, we've got all of our practice level reports. So that's looking at our work in progress, which we're going to look at the moment. So we got our practice level reports, looking at work in progress, service profitability, which gives you insight into annual accounts, BASs, GSTs, payrolls. What are our write-offs at a service level? Which services are we struggling to deliver? And we might find our three-way forecast is a 43% write-off. And that's because that our team needs training on how to use Fathom or Spotlight or Futurely or something. So that gives you insight into which services your team struggle to deliver it within budget. Practice performance is where we bring everything together. We're looking at productivity, we're looking at write-offs, we're looking at ROIs, we're looking at average hourly rates. Really cool report, that one. So then we've got our team performance report. So what we're doing is we're taking all that WIP data and we roll that up into a team level. So rather than just looking at the standard WIP that we looked at, we mash that up with some productivity data. And we're going to look at that on this call in a moment, on this webinar, sorry. We've got our client reporting. So how profitable are our clients? So we're looking at our client performance is looking at our WIP at a client level. Client profitability is looking at how profitable our client or client groups are. And finally, this open jobs here is looking at the jobs that are currently being worked on. How are they performing? Got some really cool, I suppose, logic that's written in there that allows us to track budget versus actual at a task level, giving you insight into things like projected write-offs. We're getting into like the future there. I'm going to stay away from that stuff today, but there's some really, really cool algorithms we've got sitting in the job reporting. What I want to show you here, however, is the WIP movement report, because this is going to be very familiar after what we've just looked at. So With all of our reports, we want to keep it really simple with our UI. So we've got everything pre-configured. So all you need to do is hit run. Every report, hit run, you'll get a beautiful report. So it shouldn't be too complicated. What we want to do, if we want to get a bit more adventurous, is we could choose a different period. So this will look at current month, but I might want to look at last month, for example. So I finished this month. I want to make sure I invoiced everything last month. You also have the ability to group different ways. So this is grouped by job manager. I might want to group by my client group, or I might want to group by my client. That just gives me a different view. So let's run this. We can go, we want to look at all of our WIP by client for last month. And if I want to get really adventurous, I've got this stuff under here, filters and all sorts of things. Not going to worry about that for now, but just want to keep it really simple and then hit run. So what this is doing is it's running a whole lot of calculations on all of our work in progress data. And that runs from the beginning of time because every WIP entry might have a relationship with a WIP entry from a previous period. So we need to make sure that we run the WIP report across every single transaction that exists in XPM. So here it is. So you'll recognize this: opening WIP, time added in March, cost added in March, invoiced, write-ups and write-offs. And you'll notice the invoice got negative numbers, the write-ups are positive numbers, and our write-offs are negative numbers. Cool. So what we can also do is we can sort by these headings. So we might want to look at what is our highest closing work in progress balance at a client level for this month. So remember, we're in April now, so we should have finished all of our invoicing for March. I sorted it that way. So this, here we go, we've got negative WIP here. So this will be a fixed price agreement client that we've, here we go, let's have a quick bit of a look. So these are all the different jobs that we have for Top End Importers Limited. You can see the opening WIP across the different jobs. We haven't added a lot of time in March, and we've got a large negative WIP balance. So this job's actually looking really good. What that says to me is we've got $5,967 cash in the bank over and above if we weren't invoicing in advance. If I sort this report the other way, we get our highest WIP balance sitting at the top now. So this is the risks we're looking at. Here we go. So what do we got? Sheena's Sprays Family Trust, $9,000 of work in progress. So if I expand this, you can see got all that WIP there. So that was the time added. These were invoiced. We raised some large invoices here. So basically, it looks like these two jobs here, we've invoiced, which is looking really good. There's a negative invoice on there, which is a bit strange. Need to look into that. That's the classic demo data. But we've got a negative WIP balance there of $9,000. So I know straight away that this job is the big risk to me. So what we can do is we want to basically run down this report here and see which clients have got low time added and high WIP balances, because those are the largest risks to us. So that's the WIP movement report, and we can slice and dice that anyway, as you can see, by job manager. So this is, I'll just show you one more here. You might want to run this by job manager, and rather than looking at the work in progress at a client level, it's going to show me at a job manager level. And this helps you identify.
Well, just to ask as well, the key dependencies for getting this sort of data out of XPM would just be making sure that all the invoice and time is allocated to the appropriate job. Are there any other sort of major things that Link relies on to draw these sort of insights out?
Nothing. We still get insights if you don't have the invoices and the time tied together, but basically the information in the report's no good to us. We can still see it, but it's no good. As long as you have the invoices and the time together, we're going to get some beautiful reporting. So cool. I've gone client job manager. That's all right. Well, what I want to skip on to next is if we go to team, and I'm going to show you the team performance report. Just to let you know what I did there, I should have chosen job manager. I chose client job manager. So otherwise we would have seen all of our job managers and the work in progress they have, and we can then drill in to see which jobs those job managers have. But just in the interest of time, I wanted to move on here. So what we're looking at here is the team performance report. So we're taking that WIP data and we're now looking at it based on our staff, because it's a very common question is like, right, how are my staff performing? So what we do is we allow you to group your staff in Xero Practice Manager into teams, roles, offices, and whether they're billable or not. And you can even create your own groupings there. So we've got the accounting team, the director team, the admin team, the offshore team, and the senior management team. And I can see at a team level, the billable time that they've done in the period, the non-billable time, total time, the leave taken, and their productivity. So I can see that my offshore team was 71% productive and my accounting team was 62% productive. That's the billable WIP by team. The net write-ups by team. So as we saw when we did that wash up for Sarah and Chris in that example, they get posted through to those people. that's going to show here in our net write-ups. So you can see that being March, this demo is based on a New Zealand financial year, being 31 March. We typically see a lot of write-offs occurring at the end of financial year. So then we get your revenue. So your revenue is your billable WIP adjusted by the net write-ups. So with a large amount of write-ups, as you see, that brings the revenue down. Our cost is based on the base rates for those staff. We've got our profit, we've got our ROI, and then we've got our average hourly rate. So what we can do is we can expand our team now to everyone that's in the accounting team. So those are all of our accountants: Abby, Alison, Bianca, Billy. And then I can see at a individual level, productivity, billable amounts, net write-ups. And I might look at this and go, whoa, Billy wrote off $12,000 last month. And yeah, Peter down there, 17,000. But let's investigate what Billy was up to with that 12 grand write-off. So again, I really want to stress that this shouldn't be used to jump on Billy and go, hey, Billy, what did you do wrong here? It's about sitting down and talking to Billy and understanding why these write-offs have occurred. Because generally it's because one of the directors has underpriced the job. So here we go, there's 600 written off on this job here. For Mr. Mike Wobbles Limited Family Trust, $1,000 there. So we're looking at big ones. This looks like a big one here. Here we go, 4.5 grand. So I might want to sit down and talk about the Phony Homies Family Trust for their 2021 annual engagement. We had a $4,000 write-off on this one. So that's the sort of conversation I want to be having with Billy, is saying, hey, we wrote a 4.5 grand. Why was that? And she goes, oh, well, let me tell you. There were intercompany transactions. They refinanced, didn't tell us about it. Da, da, da. You know, so, and or there could be, hey, they need to be on zero. It takes me too long because I'm manually entering everything. So this is where some really incredible information lies in these write-offs here. Now, what we can also see is our revenue cost all the way through to ROI at a staff member level. Again, ROI is really good to look at a conceptual level. I would never give someone's performance targets based on their ROI, because what I find is really dangerous is to look at the data, not into the data. If you look at their ROI, you go, wow, actually, Allison's great. Where we got here, Curtis is not doing a great job. We need to understand why their ROI is sitting like that. And generally it's to do with maybe some training that needs to happen, or maybe it's to do with that the jobs are underpriced, but you need to look into the reasons for this. Another big thing that I want to point out is we're running this for 1 month here. We run it for the last 12 months, we're going to get more data, because all our WIP wash-ups were done in March. Because if you looked at the way we run our jobs, if we're on fixed price agreements, we're billing over 12 months, we can't do our WIP wash-up until the end of the month, right? So if we do all our WIP wash-ups at the end of the financial year, that's when all of these write-offs are going to come home. So now we're running over 12 months, you can see that we'll get a lot better information here in terms of our averages. So we're getting a much better representation, a lot smoother data on our ROIs. See the average hourly rates here. So average hourly rate is looking at your revenue divided by total time worked. So really, really powerful there. And if we want to have a look at, for example, let's have a look at Allison. If I click on Allison, that'll drill me down to a 12-month summary. So I can actually look month by month how Allison's been tracking. I can see there's not a lot of historical data there, but if we click on someone who has been working for us for 12 months, we'd see 12 months of data across here. Cool. All right. So the last report I want to show you is around repricing our fixed price agreements. So if we go to our client profitability report, what we're going to do is the client profitability report, it looks at your performance of your clients. So we're looking at things like your average hourly rate and write-offs. We're trying to identify which clients we're writing a lot of time off for. By default, this runs over last month, but what we might want to do when we're pricing our fixed price agreements is run it over the last 12 months. Now, bear in mind, this could be a little bit of data here. So it might take a little bit of time to produce the report or not. That was pretty quick. So there's a lot of really good information in here, but what I want to focus on is our write-ups and also the average charge rates. The average charge rate looks at the revenue for that client divided by the total amount of time worked. So a higher average charge rate means they're more profitable to us. A low one is going to help us identify clients that we need to lift their fees for. So let's sort this. You'll find there'll be a bunch of zeros there, maybe the clients that you haven't been invoicing. But if we scroll down and find, there we go. So these are some real low ones here. So the other things we're going to be looking at is if we invoice them a lot. So there we go, $6,000. So we did, so we're averaging $5 an hour for this client. $54. So sometimes you find that there's a few that don't really make sense because there's a bit of it. The data hasn't been captured correctly. Once we get into the $30, $50 an hour, this starts giving us some really good insight here. So here we go. Billable, $2,000. We invoiced 1,445. So we wrote off 28% of the time, giving us an average hourly rate of $100. So that's Tweak Family Trust. And then we can expand this right down to get a full breakdown of the tasks that we're working on. So there's basically a full analysis right down into drilling into any of these timesheet entries. So if we want to know who worked on the annual accounts or what the timesheets were, drill right down, you can see exactly what's happening. So I can see Jeffy Jacobs worked on it. So just as you can see, like full transparency and everything all in one report. So we want to export this list into Excel, and then we can go through. As you can see here, the Pikachu Family Trust has our highest average charge rate at $698. So you may want to have some KPIs in your practice around what our average charge rate should be per client. Might be 150, might be $200 an hour. If clients are falling under that, we want to look at lifting their fees for that next financial year. So really powerful report for getting this information.
And well, just for those maybe who are seeing a number of PI customers on the call today, this is again the reports that you'd go through when you are going to re-engage those client groups as well and creating those new proposals. Ultimately, it'd be great to surface this information within PI at the point of engagement. That'd be really cool to suck some of the link reporting data in. Not speaking out of school there, but having this open in your second window while you're building out the proposal for the next year is critical to understand whether you're actually pricing the job right or not, for sure.
Definitely. And what you can even do is that re-engagement process is you probably want to jump into this report here, export it into Excel so you can see. Another one to do is actually the WIP report as well, because the WIP report that we looked at, just that WIP movement report, if you run it over the 12 months, you can see where your time has been added and what your write-offs are. The challenge with this report here, it's only looking at your completed job. So if a job is still in progress, it's not going to show up in this report. So it's a bit of a balance between looking at this and getting a sense of which clients you've underpriced, and also using that WIP report that we looked at earlier. And then if you run that over the 12 months, you can see exactly where your time has been added, what was invoiced, where your current work in progress is sitting. And then you can use that information in Excel to go through and reprice all your agreements. And then when you go do all your re-engagements, use that spreadsheet, because realistically, you might have a bunch of different job managers throughout the practice. It's not going to be one person that reprices everything. You get all your job managers to look over their spreadsheets, come back with the pricing, and then you go through and get your practice manager to re-engage them, or whoever does that re-engagement process. But it's about understanding the data that exists in link reporting and utilizing that to reprice your engagements. And you know, if you're writing off $200-300 grand a year, it only takes one financial year to go and fix all of those mistakes, and that's the sort of our bottom line impact you can make by re-engaging people with the correct fee.
Unreal.
Cool. All right. So just jump back into.
I think we can probably start to wrap up, mate. I think conscious of time. I mean, I'll go through your WIP movements thing here, but yeah, I think we're coming up to the hour, and I just wanted to shout out if anyone does have any questions, throw them in now, so we can try and answer them before. I think Ruben's been answering questions as well, which is great. But if there are any that you wanted to pull out there, Will, if you wanted to have a quick look, we can squeeze those in at the end as well. Otherwise, forever hold your peace.
Yes. So what I was just going to say is, just to wrap up, is Ruben and I have written a book called Everything You Need to Know About Xero Practice Manager. It takes you through basically everything. It's 88,000 words, so it's a full book on how to run an accounting practice on the Xero platform. Includes Practice Ignition, so how to run all of your engagements through Practice Ignition, all the way through to reporting, everything you need to know about running all your reports out of link reporting as well. So if you are running an accounting practice and you're using Xero Practice Manager or looking to use it, that book is just going to give you everything you need to know. So it's pretty powerful.
Absolutely. And for those of you who haven't heard about PI, I guess if you flick over to the next slide, the key point that I wanted to make was the integration with Xero Blue and Xero Green allows you to automatically deploy all the jobs into Practice Manager linked back to your service library inside PI. So in terms of systemizing this, maybe Will, you can speak to this for 15 seconds or so, but in terms of getting a really tight system in place where you've linked each of your job templates through to a service in your Practice Ignition service library, it makes sure that all the proposals that you sent out, the relevant jobs are created for all the work that you're engaging for, and nothing is falling through the cracks there as well. So it gives you a really airtight process for your reporting to make sure you're getting clean data out the other side.
Yeah, that's right. And that's sort of in the book, Everything You Need to Know About Zero Practice Manager. We talk about end-to-end process. So all your engagements in PI, deploy perfect job templates within Zero Practice Manager. You capture your information the right way, you get beautiful reports at the back. So we do present an end-to-end solution, including scheduling and everything. Yeah, so we want to make sure that if you, the tech stack you're looking at is Practice Ignition, Zero Practice Manager, and Link Reporting. If you use those 3 apps, you've got a really clean process to run the practice on.
Awesome. I appreciate that. I think Ruben's jumped in and answered all the questions. So if anyone has questions following the session, feel free to shoot us an email directly, and more than happy to help there. But I'll jump onto the last poll here and launch that. If we can help you in any way, guys. Yeah, or even if you just move to the next one. Yeah, no, it's all good. I'll launch this poll. If you would like more info from Link, which I'd encourage all of you to do, especially those of you who are PI customers and you haven't spoken to them yet, definitely do that. If you'd like more information about getting started on PI with your service library and integration with Zero Blue and Zero Green, make sure you click that option as well. Or if you'd want more information or links to free trials or anything, select that third option and we can be in touch with that as well. Like I mentioned, the webinar series that we created together is going to be sent out to all of you as well. So what we're hoping to do is basically transcribe each of the 3 webinars, put them into some content and give that to you in a format that you can share out across your team in a way that's easily digestible. And so otherwise, I just wanted to say, Will, a huge thank you for your prep today and for your time. It's been awesome. I've certainly learned a lot. We had some great feedback in the chat and the Q&A there of people enjoying the session. So thanks again for your time, mate, and for joining us today, and for Ruben for being in the background and being the Q&A ninja through the session as well. There he is. Love that, Mo, as well. And thanks everyone for your time and joining us today. I know it's a super busy time of the year, so really appreciate you spending 45 or close to an hour with us today, and looking forward to speaking with you in the future about hopefully how we can help you out. So thanks again, Will.
Cool. No, thanks very much, Ethan. Appreciate you guys coming.
Cool. All right. Thanks, everyone. Chat to you soon.